Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com for August 28th, 2007. Well, what did we see today, guys? We saw a bloodbath today, one more time, and we haven't said that for about a week now, but we are saying it again today, and those of you guys that have been watching the videos over the past week know that we had a specific turn day we talked about last week, all the way, basically we mentioned it even yesterday, as today being that turn date. We said, guys, and this is going back to last week, ever since we were at this low, when we hit this low, by the way, which coincided on the SPY, and I'll show you guys that in a minute. Whenever we hit that low, we said, okay, guys, we're doing for a bounce here. We got the bounce. We said, watch August 28th, all right? We topped out here, all right? And we said in the last few videos and on the daily market report on the website, InTheMoneyStocks.com, and in the chat room, all that you guys that were in the chat room also know this date was very significant. We said that the technicals are showing that on August 28th, that's Tuesday, August 28th, we will have the start of the next leg down in this market. All right, we've been saying all along, this is just a rally, this is just a bounce, and then we are going to have another leg down, and we said August 28th specifically. Okay, folks? And what did we see today? Look at the NASDAQ chart here, guys. An absolute clubbing. The NASDAQ, not only did it break the 20 moving average right here, but we closed on the daily below the 200. Now, that's a very bearish signal, folks. All right? And what did this bounce allow us to do? See this bounce, guys? This bounce, this constant move up right here, what did that do? Well, here's the stochastics, then, now here they are now. What this is going to allow for us to do is let the stochastics take us down one more time. We should come down at least to make a double bottom right here, if not take out that low. Now this could happen over the next week or so, and that's what we're thinking. We're going to have little bounces along the way, but the general trend now should be again down. And we continue with the stance that you can short all rallies, okay? Just like you could short this one, you could short this one too, and thus you're seeing the rewards of that short. Okay, folks? This was called in multiple videos ago, even yesterday was mentioned that August 28th was our turn date in the markets. And again, just to let you guys know, that's based on our technical analysis, both proprietary and our signals that we use in analyzing the markets that are common out there, okay? And that's for another day to go over what exactly those signals were. Those of you that are interested in a webinar or a seminar can always sign up. We're going to have one debuting in about 3 weeks that everyone should be signing up for. It's going to be technical analysis galore. It's going to be phenomenal. Also, those of you guys that are interested can come in the chat room, and we go over this constantly all day in the chat room. Just a phenomenal learning experience left and right. And those of you just don't have the time to be in the chat room, the swing trade alerts take advantage of those all the way. Okay, let's go to the intraday NASDAQ chart. We gapped down a little bit, guys. We were only down about 15 points at the open. But remember, the whole time, all day, we said today's the turn date. This is going to be a bloody day. And this was called multiple days before again. And we saw a continued sell here. Constant sell down to about 37 points on the NASDAQ on the drop. And then what did we see? Well, we knew the FOMC minutes, the Fed minutes were coming out at 2 o'clock. So as we went to lunch today, we said, all right, guys, don't expect much until the FOMC minutes right here at 2 o'clock. And what happened at 2, guys? That's what happened. And we sold right to the close, pretty much closed at the low of the day, and we really had nothing, nothing whatsoever to do but watch this market fall. I mean, that's what you just be on the short side all day long and you'd be fine. All right, and I want to just show you guys something right here on this intraday chart, okay? And notice this flag pattern, guys. This is what we like to term as a pseudo bear flag formation. See how you connect the lows of these, right? The first close, see, it attempted to close here, it did not close below. The first close on this 10-minute, below this candle right here, which is right here, and the break of that low, you go short. So you broke it here, and you get that whole amount short all the way down, folks. That's the way to play it safe. Those of you guys that are risky, the first close you can short, but then you have to deal with that push up. If you don't want to play it risky, you wait for a break of that low candle that closed, and you go short and you ride it down. That's a technical breakdown pattern that we love to play, and it's just constantly occurring in this market because of the type of market we're in. Now I want to switch over to the SPY. You guys know we've been making this call on the SPY for quite some time, and I'm going to go to the weekly chart here so we can all see very clearly. Well, on the weekly chart, this is where we bottomed out, guys. This is before that last bounce. All right? We touched this low, which was our original call, before we got a bounce. We got a sizable bounce here, 200 points on the NASDAQ, very sizable bounce. And what did we say? We said August 28th was going to be the next downturn. That's right here. And look at this fall right here, guys. Sizable fall today. Even on the weekly, we closed below the 50 moving average on the SPY weekly. These are all bearish closes, guys. Now, what does this mean? Because we closed at the lows, we could see a small bounce to flat trading. What we always say in the chat room, guys, in the intraday stock chat, is that whenever you have a sizable move one way, a big move one way, sometimes the day after you get a pause. And what's a pause? Well, a pause is where the market, the indexes, they might trickle down a little, they might trickle up a tiny bit, but in general they're staying around that flat line as people kind of decide whether or not to take the market lower. And inevitably we are going lower, folks. What you're going to look for here again is you're going to look for a retest of this low. And now the question is here, and we'll stretch this all the way over here, and you can see there was a hit right here on that. Now the question is, when we come down here again and we're on this line, will it hold as a triple bottom or more, or will we break? A close below this line and we are going to go much lower. You could be looking at a move down as low as here. Now this is a far way in advance, so I'm not going to get too much into that, but be aware of these, alright? This isn't some time when you're on this line or below it, especially if you close below. You don't want to go long there because it's going to signal another move down. So please be aware of that, folks, that you want to be very careful. We've been recommending it to a lot of people, and again, we are no analysts. This is just our humble opinions. And so please consult your advisors whenever doing a decision like this. But we had been recommending going into Monday, Tuesday to have a little 2 times short ETFs, have a little ETFs, SDS, DXD, QID. Now you've had the initial move today, so if you weren't in today, there's no sense in really chasing it down here. So I don't say that, all right? And again, this is just our humble opinions at InTheMoneyStocks.com. What I do want to show then is now I want to go to the ES chart, guys, and I want to show you something very interesting here. And I'm going to move this volume bar up because I want to analyze something with you guys. Here's the ES. This is the ES Futures S&P Future E-mini contract, S&P 500, and this is the 10-minute intraday candle chart. Now, what did we see today? Well, here the market opens. Right around here the market opens. You see this volume, obviously, it's an increase in volume. So right around here the market opens, and we get this initial move down. Look at the size of the volume here, guys. Alright, this is how intraday we knew on the Fed we were going to continue. Not only did we know that the 28th was a signal day for a drop, but this is how we knew that a continued move down would occur. That intraday period between lunchtime and the Fed, we had this slight up move, which I showed you on the NASDAQ for that short position to go short in that index when we broke below that low. But this is what we saw, this angled up move. And you guys know I think that's a dead short pattern right there in general. And what did we see volume-wise? Look at this volume. Okay, guys? Look at that volume. Just how minuscule is that volume on an up move in a market? Whenever you see tiny volume pushing the market sideways to up, and then big volume on the sell side, then you know it's going to break down at some point. And look at what happens. Look at the size of this volume. Look at this candle, for instance, guys. Huge volume on the downside. So you got increased volume and a major sell-off, basically, all right? Now, when you see that, you have to understand, that's the big boys dumping. They have the volume here. So if they're not buying here on this sideways motion, if you saw volume candles upwards of here, then we might think differently about this move up going into the Fed. But they weren't. They were tiny. So we take that as a signal to understand that this market needs to go down more. Okay. So again, how did we know that this was going to happen? Well, there were multiple signals that we go into. I don't want to divulge all our secrets because some of them we do pride on ourselves as being the ones that we personally use, and it's a combination. It's all a bunch of signals we use, proprietary and technical, that we look into this markets and see what's going to happen. What I did see yesterday, though, and many of you guys could have followed this, and I'm sure those of you guys that watched the video yesterday, look at this volume. This is today, all right. So this is the SPY chart, the spiders. And this is yesterday over here. And all day we saw extremely light volume. And then the last candle of the day, we saw this spike up in volume. And it was a big sell candle right here. And to that just confirmed it to us, guys. That just confirmed it. When you had big boys dumping yesterday into the close, this is the last 10 minutes of the day right here. And the size of this volume, red bar right here, is this much. It's about 2 to 3 times all these other bars. That's a dead signal that they were going to crush this market today. And as predicted, as we said it in InTheMoneyStocks.com, that's what happened. All right, guys, enough said. What are we going to look for tomorrow? Well, you're going to look for a possible pause in this market before another leg down, or you're going to look for continued selling. If we start taking out the lows of the day, you're going to see continued selling, guys. And I just want to be sure that everyone understands this. This is just our opinion, but we do think the market needs to go down and retest the lows from a week ago Thursday and inevitably the March lows. And if we do close below, guys, watch out. Okay, guys. Lastly, what I just want to talk about here, guys, is this is the SPY one more time. We saw the volume divergence here. The volume big on the sell, small on the buy. That was a signal. But I also want to just go in. I just want to encourage everyone to come join the chat room. Basically, a month-long seminar for $199. You can't go wrong. Swing trade alerts the same way. We just had a trade that we closed out today, IGTE on the short side. This was a swing trade alert, and it's closed out, so I can talk about it now. We made over 12% on this in a week or so on the short side. Just a phenomenal call by InTheMoneyStocks.com on the short side. And 12% in a week. You can't go wrong on a swing trade like that, guys. And we're out of that position now. We have a couple in the money right now. Because, again, as we call these moves in the market, guys, we're doing swing trades on this. And we're gonna have a phenomenal swing trade track record. We'll continue to post the swing trade track record, which is on the website, InTheMoneyStocks.com. Have a wonderful day, guys. We'll talk to you tomorrow. Be safe. Be safe.